PMI data and BOE are in the focus. Hello and welcome to our weekly outlook. With the cooling of the earnings, now eyes turn on economic data. The week ahead will cover huge data and numbers with employment data from US, Canada and New Zealand, while PMI numbers from the UK, US and EU, especially with the China, to shed more light on the course of global economic recovery. Let's review the most important events and the financial data of the week ahead. Number 1. Manufacturing PMIs. Monday is the manufacturing PMI day. Australia, Spain, Italy, France, UK and United States will report the manufacturing numbers. As in this stage of economic recovery we are waiting, in past months manufacturing sector was increasing. Now it's time to see a little bit slowing down. We expect the ISM manufacturing numbers to slow down a bit in the United States but to still stay above 60 level. These data generally supposed to slow down the market bulls and put the United States dollar under pressure before Friday's employment number. Number 2. RBA interest rate decision. Australian Central Bank will meet on Tuesday and with ongoing concerns about the virus development and containment measures, we do not expect any changes in monetary policies. Reserve Bank of Australia is expected to hold its dovish policies, especially with the latest comments from the council members about inflation. They believe that it is transitory as is expected in other countries as well. The Australian dollar is expected to continue its downtrend after central bank dovish policies. Number 3. Service PMI's number. While we had concerns about Delta, flooding added more reasons to reduce our expectations from service sector. Last month in the United States and UK, we had surprising fall in the service sector, although Germany's manufacturing and service activities are above 60. However, we expect another slowdown in the economic recovery path for July. With labor shortage almost in all developed economies, we are also seeing evidence of weakening economic activities, and it will affect the service sector as well, as consumers will have less encouragement to spend money. As more weakness in the United States and US data are seen, we expect that the euro can regain some of its losses in the past weeks against US dollar. Number 4. BOE meeting. With the departure of Mr. Andy Halden as the chief economist from the BOE board members, we were expecting to see the hawkish front to become weaker. However, with the recent employment data, which showed more than 1 million unfilled vacancies that businesses are struggling to fill, the situation is changing. Even if it's unlikely to see any changes in this week's meeting on both interest rate decision and asset purchasing amount, will be interesting still to see the balance of the vote in support of or opposition to policy maintenance. By holding the dovish policies of central banks, we are expecting to see the FTSE at the higher levels. And finally, number 5, the event of the week, USNFP. Despite the significant increase in the new job numbers to 850,000 from 583 in June, increasing the unemployment rate to 5.9% was disappointing. Still, we do not know too much from these 9 million job openings that are currently unfilled in the US economy. How businesses can fill them is the main and primary inquiry of Federal Reserve at the moment. Last week, Federal Reserve Chair Mr. Powell said that the labor market still has some ground to cover before decreasing the support. We do hope to see a bit of slowdown in the stock market and a little bit lift in the US dollar with expected positive job data. Thanks for watching this video and hope you will have an amazing week ahead.